Hey, what is up, guys? We know that US national debt is going through the roof. It is over 21.8 trillion US dollars in debt. I know this figure is hard to imagine, but let's just see what would happen if US stopped paying its debt. In this video, we are going to look what would happen if United States was unable to pay its debt from different perspectives, starting with the world of international finance and ending with the price of the grocery stores. It has been more than 2 weeks since the federal government closed many of its doors, sending roughly 8,000 employees home to wait without pay and taking yet unknown direction on the country's economic recovery from the Great Recession. During that time frame, as politicians have pointed out the end, the worried consumers have prepared cash flow plan. So, what would happen if US actually default on its debt? At the time of this video, the value of national debt is $21.8 trillion. It is more than double since 2008 housing crisis. Debt continues to rise. Lots of people know that default would be bad, but not everybody seems to get how terrible it would be. While the risk is low, knowing what would happen if default did occur, it is important information for all people. The United States government has a lot of debt, I mean tons of it. $21.8 trillion comes out roughly $66,000 per citizen. While the debt to GDP ratio today is not quite as high as it was after World War II, it is still unsustainably high level of 105%. If the debt were visualized as a stack of $1,000 bills, it would be more than 1,040 miles high. If it would be in a single dollar bill, it would be extended past the moon. Just imagine that. All these statistics are pretty dry. The numbers are too large to have any meaning. The percentages and ratios to display to promote the reaction. Catastrophic scenarios like the government defaults on its debt are described so abstract that the gravity of the situation is obscured. To make up for this, we will look what would happen if United States was unable or unwilling to pay debt from 5 different perspectives, starting with the world international finance and ending with price of the grocery store. What would happen if United States government defaulted on its debt? Before we begin, it is important to mention that while many countries have defaulted on their national debt before, no countries whatsoever influential, so deeply integrated with the global economy has ever gone busted. This means that while we can only look at the past for evidence, there are variables in that case with no analogies elsewhere. So, while nobody knows for sure what would happen, we can make educational guesses and predictions using the data we have. Take these predictions with a little salt, but not so much. The first blow would come to the world of global finance. Investors and government around the globe purchase US government bonds. There are lots of them available to buy, and they are currently considered to be very safe bet. While you won't make much money on them, you are sure about getting payment at a later date. According to former Treasury Secretary Timothy Geithner, if US government would default, it would cause interest rates to spike all over the world. This is because Treasury bonds represent the benchmark borrowing rate, and anything that causes them to become a less certain investment will affect the entire financial system. The interest rates on the bond would go up, as investors would no longer be sure of the future payments. This would increase the cost of the consumer borrowing from credit cards to auto loans to mortgages. In the United States at the time of this video, when average household owes roughly $6,700 to the credit card companies and student loans balances are well over $1.5 trillion. Increased interest rates are not something we can afford. If the government defaulted and either refused to pay interest or declared it would pay bond back a fraction of the face value, a lot of bondholders would be in trouble. The sudden realization that full repayment of those bonds was unlikely would probably lead to surprisingly unload them to anybody who would take them. But surprise surprise, nobody would want those bonds. Any organization that holds lots of those securities, such as banks, pension funds, or government of Japan, would also be in trouble, since trillions of dollars in what were previously safe assets would then be worth a fraction of their face value. Banks would suddenly become very miserable with their money and less likely to lend. Most institutions would likely to find themselves suddenly bleeding blood down the hill. Global stock market would fall rapidly, as occurred during the 2011 debt ceiling crisis. In that case, the Dow dropped 200 points in that day after S&P changed its outlook on US debt. Imagine what would look like if something actually happened. Investors would likely pull their money out of US stocks and put them in something more safer, something like precious metals such as gold and silver, and most likely Bitcoin, and we would see a rapid price spike in these assets. However, the US economy is large and connected with the rest of the world. It would probably drag everybody else down the toilet. A taste of this was seen in 2011 during the debt ceiling crisis, when other countries' stock market fell in response to the chance of the US not paying its bills. People holding government debt. Less than half of its national debt is owned to foreign government. More than half of the total amount is owned to Federal Reserve, mutual funds, public and private pension plans, insurance companies, banks, and holders of several bonds. All of these institutions would suddenly find themselves a lot worse off than they were the day before the default. If the government defaulted, the people hurt the most would be retired people and anybody who hopes to retire, as the value of the large amount of pension funds would fall as their assets decrease in value. Also, since the United States government owes a Social Security fund $3 trillion, there will be a nice crisis as well. Essential services, which stay open during the government shutdown, would likely to go down. This reduction in government spending would cause many businesses not to make sales or receive payment, and leading to layoffs. The effect on consumers and working staff. As you might have guessed, a sudden increase in unemployment is likely to follow the United States default. Even if you were still getting paycheck, do not hold any bonds or any money on the loan. Have more gold and silver instead. The inflation caused by default would affect everyone. This would mean higher prices for you at the gas station, grocery stores, and any malls, especially on important goods. Any currencies you have saved away will begin to lose its value, since the inflation rate will be well above the interest rate that banks pays you. So you will not only be paying more out of your paycheck, but your savings will be worth less and less each time you have to dig into them to pay your bills. In Argentina, which defaulted in December 2001, inflation spiked after the government announced it could not pay its debt as people lost faith in its currency. This caused prices to rise in all products and services, making life even more difficult for those who left unemployed by conditioning leading to default and causing the poverty rate to rise quickly. Since people lost confidence in its government, they are looking for more assets that are not controlled by central government, such as gold and silver, even though there is a chance government might confiscate your precious metals during any recession. Now, people more embracing another decentralized assets that it's not controlled by government, such as Bitcoin. Unlike precious metals, the chances are government will not confiscate your cryptocurrency. So we came to the end. Let me know what you guys think about US national debt. Is it possible to pay it off? Leave your thoughts in the comment section below. If you enjoyed this video, hit that like button. And if you're new to this channel, do not forget to subscribe for more animated videos about financial market and cryptocurrencies. Other than that, thank you for watching. See you next video.